5/29, 2011. I'm very happy it's Memorial Day, and all of our goodwill goes out to all of those soldiers over the times of war, from the very first war to the very end of it all, is that they fought hard. U.S. governments, worldwide governments, that's a different thing. I'm looking at the DJI. It's called the Dow Jones Industrial Average. Now, what we're going to be looking at here key specifically is that part of the history here, folks, is that the big correction, and then we've had a 2-year expansion. We had a 4-year expansion that collapsed. We had a 1996 up to the 2000 top, and it collapsed. Irrational exuberance. What I am going to show all of my MMTs worldwide and US wide is that when we were up here, we were at 88.91% at the top of the 2007 move, which is considered extremely overbought on this public indicator that I'm teaching you about. You don't make decisions on these. This is what the public does in the big money will. Now, let's take a look at the high here. 94.84%. This monthly reversal that we called for in May is right here. So let's pull up this bull rally reversal. Bull rally. I didn't say bull market. I said bull rally. We've had a 2-year bull rally. And basically, here we are. I'm going to draw a trend line over here, and I'm just letting people know that when we called for this pullback here, remember, every bull rally has a pullback. And every overbought process has a pullback, and that's the time to be selling into the strength. And we're going into the month of June. We're going to be looking for this support level right here. This is half of that monthly down bar. If we come down and bounce or sell through it, bull rallies need to come back. These are monthly moving average. A 10-month moving average, 50-month. Look at the 20-month. They're all rising. The 100-month is kind of flattened out. The shorter monthly moving averages are pointing up. That's bull. That's bull. Here's the top right here. Okay? This is that trend line, this top trend line. That's where it really got nasty. About $3.6 trillion went up in smoke because, once again, every time your government has the irrational exuberance trying to buy the world and create programs out here that are known failure programs to kickstart the economy, as they never know when to get off board. It creates look at who creates bubbles. Your government creates bubbles, and who follows it? The people. The people follow it. The people get sucked into it. They get sucked into that mentality. When we're making markets, whether it's long-term markets, short-term markets, market maker intraday for profits, it doesn't matter. Everything has a system to it, and an overbought and oversold. They have bull indicators and bear indicators. These are all good bull monthly indicators, except we're too overbought right here. We're already starting to tilt that red line. We're already coming off of 94. That was the peak of the yearly high here. Now we're at 92.12. So we need to come back down and test these monthly moving averages in here to create buying opportunities. The upside is limited to here. That was the all-time monthly doji gap down reversal. Never look back. The month of June is traditionally a very slow month. We need a correction in the month of June. Work the overbought process up because we're going to be going into the July quarterly earnings. How do you trade it? Let's just take a look at the 2010 consolidation to the big-time breakout. Once again, we've had these pullbacks in these rallies, and a lot of them were, last year we had 2 months. This was a month, and this was a narrow range month, and now we have the month of May within the longer term bull rally. We need to come back down and test these moving averages. It would be good for the Dow to come down to about 11,570 or so to test the monthly moving average. They're very bullish monthly moving averages, by the way, because they're rising in value. Whereas you've had a monthly buy signal now on the Dow for quite a while. And this goes all the way back to 1970. And you can go on stockmarketfunding.com. We got the history of the Dow. The thing about it is that when we hit these overbought areas, as we are here today, you can see that when bear rallies start, these monthly moving averages, they turn down. They go down. When they're rallying and ascending like they were over here, that's bull rallies with monthly moving averages. Hedge fund, institutional traders, and institutional investors make decisions on this. It's the only way they know. What I will tell you is that we've ran a 2-year rally, and that bull rallies they need a good shakeout in the market. Generally, the month of June and the summer months to the stock market are seasonality weaker than other times for across the board, statistically and percentage wise. So what we'll look at is what took the Dow Jones higher, the Dow Jones Industrial Average higher, were some key stocks in here that we like. So when these stocks pull back, the index pulls back, the leaders that led them, if their earnings are intact, those are the first ones that we buy on the dip. And we go through and buy a little bit of everything in the key indices to get what we call diversified. Diversified to overnight positions, diversified to risk management exposure. So we won't go into that right now, but we will go into that in lots of your daily training. That's the month of May. Now, in the month of June, we're going to use the weekly chart. We'll use the daily and the weekly. And if we gap down, because this won't be final until the end of June now. However, on the weekly charts, it will give us the signal as to where this monthly chart will come to. And remember, bull rallies get overbought. Bear rallies that go down in value and you make money on short, they get oversold, and they're buying opportunities. Right now, it's all about it's all about the investors. Because the problem is they get so greedy that they don't ever know when to sell. They're blinded. You will never stay up here this high. And June correction is around the corner on the Dow Jones Industrial Average.